Fraser, how do you make a strategy for trading? Fraser, wonderful question. All 20 of you in here, listen in. How do you make a strategy for trading? Making a strategy for trading is a very unique experience where you have to realize and recognize that you as yourself are an individual trader. Everybody has their own history, their own childhood, which has developed their own risk tolerance, their own reaction times, their own emotional attachment to things, how easily they get emotionally attached or how difficult it is to become attached to something. And everybody has a different personality. Some people like quick, fast action. Some people are more calm and slow and methodical. So you need to realize that you have all these different personality factors affecting your trading. You can't just go online and look up somebody else's strategy and trade it as well as that person can who developed the strategy, because that strategy was developed by a person to work best for that person. You need to find a strategy. You can adapt that strategy to fit you a little bit better, but you need to find a strategy that works for you. You have a strategy out there somewhere. Out of all the infinite possibility of strategies, there's a strategy out there that works for you and you personally. You can't buy that strategy from somebody else. You can't sell it to somebody else. That's why I don't teach strategies. I don't sell you strategies. I sell courses that teach you how to develop a strategy. I sell mentorship, one-on-one mentorship experiences that I will help you one-on-one develop your own personal strategy. Because I don't believe I would make so much more money if I just put together a strategy and sold that. Because that's easy. People will buy that faster because it's easy, but I'm not interested in selling faster. I'm interested in selling better. I'm interested in giving you all a product or a service that actually helps you be a better trader in the long run. So first step is recognizing that you are your own unique self and you are a unique trader who deserves a unique strategy. The second thing is to figure out what types of patterns catch your eye, because you can train your eye as much as you want, like a muscle. You can look at these charts over and over and over and look at these breakouts, these reversals, these trends, these support and resistance levels. You can look at them a ton, but everybody seems to, all the traders I have taught and mentored, find a pattern that just sticks out to their eye. Whatever catches your eye, you want to follow that and develop a strategy, because that way you don't have to focus on, wait, am I seeing this right? It's, oh, I saw that. I know how to see that. I'm used to seeing that. That for some reason just catches my eye. I'm naturally able to see that. So I'm going to develop a strategy around it and focus on the strategy. Focus on the technicals behind the strategy. Focus on the trading structure. Trading structure is your rules, your strategy, the patterns you trade, your exit plans, all of that. That's your trading structure. And this is all part of strategy. And then you need to figure out your limitations. Are you limited to only buying shares of a stock because you don't meet the requirements of a margin account to be able to short sell? Are you limited by capital where you need to, or you wish to, learn options instead of stocks and equities? Or do you prefer the more technical trading that is involved in Forex and foreign exchange and different currencies? The happy medium that a lot of people have been finding recently during COVID is options, but trading options like a stock. They're watching the stock chart and trading the underlying option, but not trading options as if it was an option. They're not trading all the different Greeks. They're only trading it as if it's a leveraged form of the underlying stock. So you need to figure out that. And then once you figure out all that, you come to a realization that you are a unique trader. You have figured out that there's something on the chart that catches your eye. Like right here, this is breaking above this moving average. That catches your eye. You're able to see that easily. It's breaking over resistance level of 320. I'm talking about GME on the screen here. And then it bounces back, tests as support, and then is about to break out again. And maybe this breakout again after testing the moving average as support, maybe that catches your eye. And every single time that catches your eye, and you're able to trade this consistently. And then 3 is figuring out what you're trading. Are you gonna, when this pattern happens, are you gonna buy stock? Are you gonna buy call options because you're predicting the stock will go up? Once you figure out all that, then 4 is developing a style of trade plan. Once you learn the pattern, you need to create a trade plan from the pattern. For example, if you're trading this Move is under the moving average, and it finally broke over the moving average, pulled back, and is now moving back up. Your pattern could be something like this. The high of the move before the pullback was here. That's going to be your entry level. The low of the pullback was here. That's going to be your stop level. And then your target is going to be the next resistance level, which in this stock is 360. So I'm going to change the color of these so that you can see very easily. Red is your stop level, yellow is your entry, and green is your target. And you create a trade plan just like this based on the pattern. This move up over the moving average, pull back, testing it as support, satisfying, as we say in this stream, satisfying this resistance as support, so that now it's been satisfied, we can move on. The stock can move on, it can move up, because it's satisfied its resistance as support now, and then it continues up. Once you create this trade plan, then you calculate, the next step is you calculate the amount of risk, that's the difference between your entry and your stop loss. And then you calculate the amount of reward, that's the difference between your entry and your target. And then you divide these, and you make sure that it's at least 1-to-1. That your reward, your potential reward, is at least as much, if not greater, than your risk. That's because the inherent odds in the stock market is 50-50, right? So with an inherent 50-50 odds, the only way to profit in the long run after 100 trades, you're always thinking about this 100, you'll hear me say over and over and over, for those of you new here, 100 trades, focus on 100 trades. That's to give you this bird's eye view, this long-term mindset of your trading. So you're not focused on each individual trade, you're focused on a whole 100 trades to then look back at all that data you have and optimize your strategy from there. So over 100 trades, if your reward to risk ratio is greater than 1, then you will be profitable in the long run. Even if you hit 4 losses in a row, but with the 50-50 odds after 100 trades, you'll be more profitable in the long run. Even better if it's something like this, that's 2R. Capital R is the variable of risk. That's the difference between the entry and the stop loss that we talked about. So when you hear somebody talk about profit in terms of R, that means a multiple of risk. So here we're risking, entry is 333.60 and stop is 321.30 roughly. Let's just say that's $12. We're risking $12 and our potential reward is what is it, 27? So it's just over 3R. So we're going to call this 3R. So once you've figured out you have a unique strategy, you figure out what catches your eye personally, you figure out what patterns you like, if you like the fast-paced breakouts and breakdowns, or you like the slower maybe lunchtime reversals, the slower curls and consolidations, or you like trend plays, or you like counter trend plays, and you figure all that out. Then you figure out how to pull a pattern out of that. Then you create a trade plan from that pattern. And then the last step to creating your own strategy is to figure out what your exit plan is. And that's part of creating a trade plan. Your exit plan is getting out of this target, getting out of this stop. But it goes beyond that, because right now this is passing 1R. I was correct in guessing that this stock would go up over this entry point. So it's now gone up and it has surpassed the amount I was risking. Well, what do I do if this starts to pull back and if it comes close to the target but doesn't hit it and pulls back? Do I get out at that 1R level to secure my win, my 1R win, because I guessed right? So I deserve it, at least the profit as much as my reward. So do I get out at that 1R? That's all part of these questions. The answers to these questions is part of your exit strategy in your overall trading strategy. And then you put it all together and that's your trading strategy. And you use this strategy. You use the strategy the exact same way over the course of 100 trades. And then you can look back at the past 100 trades and see, well, maybe if I didn't stop out at 1R and I let everything go all the way back to break even or even the stop loss, I would have made more money in the long run because more stocks over those 100 trades ended up hitting the target eventually without getting stopped out. Or if I moved my stop to the second support level instead of the first one, I would have made more money. Or if I moved the target to the second resistance level instead of the first one, I would have made more money. You look back at the past 100 trades of using the strategy to a T the exact same way. That's key to this. You have to test out the strategy the exact same way every single day. And after 100 trades, you look back and you can then optimize it, figure out kind of like back testing. You're back testing your strategy, saying, well, what if I tweaked this rule? What if I tweaked this exit strategy? And if you figure out that the tweaks might have lost more money, then you don't make those changes, obviously. But if you find something that would have made more money over 100 trades, then you implement that for the next 100 trades. Rinse and repeat, and you eventually